Liquidity, liquidity, liquidity. That is the name of the game when it comes to Forex trading. Now, if you can understand where liquidity is in your charts, you will be 10 steps ahead of everyone else when it comes to your day trading. And in today's video, I want to share with you how you can look and find where liquidity is resting, either buy side liquidity or sell side liquidity, and how you can take advantage of a liquidity grab, or aka stop hunt, and find sniper entries, get great risk to reward ratios, and honestly, in the end, be more profitable. So when we're looking at market structure, right, we have those three phases. So we have a contraction phase, right? We have this contraction phase. So let's just say that we already understand our bias. Like for this example, we've been bullish, right, on the higher time frames. So if we've been bullish, we come to these lower time frames. This is our entry time frame. We're looking for a stop hunt on, or a liquidity grab on these lower time frames. We're looking for sell side liquidity to be taken out first, right? Because what we're trying to do is we're trying to follow along with the big institutions, right? We are as smart money traders, right? We're not trying to beat the market makers. We're not trying to beat the big banks necessarily. We're just trying to, read their footprints and just really follow along and not be, slaughtered, being on the opposite side. So right here, we've been consolidating, right? So market structure may look like this, where we come purge liquidity at this key level here, which I already have marked out. So we do this liquidity purge here. Once it does that, that is your sign. And what you're waiting for from that purge, you want to see an explosive move to the upside, right? You want to see an explosive move to the upside to break this structure, to let us know, okay, they want to take it higher. And so now what you're doing is you're just looking for an entry point from there. So it could look something like this. It's not always perfect, but what I see here is kind of traditional, I guess you want to call it, support and resistance, right? This was once resistance here, this consolidation area. This was once resistance, turned now into what the community considers as support. So this could also be coined as a order block or breaker block, what have you. Pretty much all in all, what you're looking for is that purge in liquidity. Then you're looking for that explosive move to break that market structure, a retest of that to continue higher. So that's the market structure that you're looking for. You're looking to enter. This is your entry point. This is where you're looking to enter. Right? So so that's what you're looking for. So that is, let me delete this now. All right. So now let's go into the charts and let's look at how that looks. So as you can see here, we had a purge in liquidity. This was a very interesting one because you had two purges of liquidity. You had a purge here of liquidity where it took out sell side liquidity, right? And price made an explosive move to the upside, broke market structure, but then immediately price retraced. It retraced much lower, did a second liquidity purge, right? So in this instance, if you're on the charts, right, after you see that purge in liquidity, this second purge in liquidity, what I see resting here is a breaker block, right, which is another way of saying that this is where the big institution would look to come and mitigate their short positions here. So after this liquidity purge here, we have that breaker block. What happens is price comes back, tests that, and then boom, you're off to the races. So in terms of risk to reward on a position like this, it's actually very, very lucrative because you can get a small, let's just say you enter it right at that breaker block, right? And you want to have your stop loss. This was I believe like a 2 pip stop loss you could have. Let's just call it a 3 pip stop loss, right? Just below that breaker, just in case if it wanted to do it deeper. But honestly, price has already shown that they wanted to go higher. We hit that mitigation block, that breaker block, or that resistance turn support, right? And then now price just continues to win. Now, if you know on your higher time frames, if you know exactly, we know that my target area is going to be 13300, right? So now we're looking at a 1 to 14 risk to reward ratio. We risk 3 pips to get 42 pips. Okay? So this is how you can increase your risk to reward ratio, but then also you're getting like very good entries because you're just paying attention to the market structure. So, as I said, just to go back through it again, you're looking for the liquidity purge. This one was pretty interesting because it did a second purge of liquidity because here you had that explosive move, got people. What really happened here is once price broke that structure, you have this impulsive move here. What that's doing is you always got to think, who is the market trying to entice? Who are they trying to excite? At this particular time or this particular time frame, they're exciting buyers to come into the market. So we're all looking at the same chart. So if you have a ton of the market that's looking to go long as price breaks this level, then now they're trapped, right? Because now what they do is a deeper pullback, right? Now, granted, also you got to know I must say that you got to know the session that you're working in. For me specifically, I'm not typically trading London, so this is happening when I'm actually still sleeping. So I'm not even seeing this happen. But those who are trading the London session, they, they're getting in at the highest point. Now, if you're up during the London and you're waiting to enter during the New York session just to let London play out, this is going to work great for you because now we do a second liquidity purge here. We purged that area, right, where we had sell side liquidity. Now we purge that area, and we come get that explosive move, just like we had here. We don't break this structure here. We don't break these highs, or we don't get body closes above, but we do get that we're getting. This is during the New York session at this point, so now we get New York volatility, and we have a weak dollar, so we know that any pullback here is going to be money. So you find that breaker block there, that last up candle before that purge, and then you just wait for that retest, and boom, you're off to the races. Now, if you were to potentially miss this move here, right? That's the beauty of pullbacks, right? Honestly, if you just waited for pullbacks, regardless if you wanted to use order blocks, breaker blocks, support and resistance, Fibonacci, whatever, the theory is pretty much the same, right? So let's just say you missed that, or you wanted to take a second position. You run your fibs from this swing low to that swing high that broke this structure here, right? That broke that structure there. You run it from that low to that high, you get a 62 retracement level to the pip. And then boom, you could have took a second position here, and that could have been, another 30 pips right there. So that could have been 2 positions right there. Now, obviously, price kept going and kept going, but the purpose of this video is really just to show you how to recognize the market structure Once you have your directional bias from the higher time frames, from the 4 hour, 1 hour daily charts, you know where you're going. You know where your next potential draw on liquidity is. Then you come to these lower time frames and you just watch. You're watching like price action in real time, and you're watching market structure unfold, and you're just waiting, just sitting by to get these sniper entries. So here you had literally two entries that you could have taken just on this one trade here. Now let's go into gold, which had a very similar setup earlier today too. Here we had that purge of liquidity, right? And then we had this order block created, right? We had an order block created, and we had once we had that purge of liquidity, we had an explosive move to the upside, but we didn't necessarily break structure, right? We didn't necessarily break structure. Now this one, it was a little bit more trickier, and honestly, this was one that you would have had to use like gut instinct on, right? In the sense of what I'm saying is because when I'm looking for a break of market structure, I'm looking for candle body closes above the previous wicks. So in this instance, that necessarily didn't happen. But being in tune with the market and knowing that we were going to get a push up fundamentally, I saw that this order block here that created this initial impulsive move, right? That it would most likely want to come back and be retested. But then making an impulsive decision, you see that this order block here was created. It was validated once this candle body closed above, and then we see a retest quickly into this order block to capture, up to 38 pips, I believe this was. Um, so if you would have took that trade, you got about 38 pips on that. Um, Stop loss would have been a little bit below. Could have gold is a wild one, so you want to kind of have a bigger stop loss on gold just because it whipsaws a lot. But this one would have been a 1-6, which is also a phenomenal risk to reward ratio. Now, granted, later on in the New York session, we did get a retest of this the 50% level of this order block. Okay, so if I just measure out that order block, you'll see that the 50 level is 1780.32, and then we come to this candle and we read the low of that candle was 1780.29. So literally, like, I mean, to the pip, that it came down, it hit that 50 level of this order block or the mean threshold of it, and he was off to the races from there. Now, granted, this was later in the session, but once again, if you start to understand that the overall trend and the direction of the market in a given session, when you come down to these lower time frames, you'll have multiple opportunities. This one presented itself at around 10 a.m. Eastern, New York time, which would have been a great trade. So um, just get used to focusing on, you know, your current market structure. Wait for the liquidity purge. Once you wait for that, wait for signs of an impulsive move to break market structure, and then a retest of that order block, breaker block, supply resistance zone, whatever you want to call it. But that's basically, in a nutshell, how you look for things. Stay tuned for more videos.